Hi, this is Roger Conrad. I'm editor of Canadian Edge newsletter. And what I want to talk about today is something that I think applies to a lot of income investments across the board based here in the United States, and that is a juxtaposition of strong operating numbers and, in fact, companies really exceeding those expectations that people had at the beginning of the year as the Canadian economy continues to recover, and, in fact, the North American economy continues to recover. And at the same time, a continued gloomy outlook on the point of view of investors. And in fact, a lot of people worried about things from what happens in 2011 to is there going to be more inflation to is the U.S. economy going to hit a double-dip recession and thereby hurt all these commodity-based industries, which Canada is very rich in. So you have on the one hand, some very good results, your very good reality, and a perception that that reality is heading for trouble or is not very rosy indeed. Generally, when this happens, you find a lot of values in the market, and I think we're seeing those going forward. And if you look at this next issue of Canadian Edge, the August issue, you'll see that we've had about half of our companies report earnings numbers, and almost universally, very, very strong results. What's been the result? The reaction in the market? Fairly muted because, again, people are seeing the glass as half empty. And again, very much indicative of strong values out there. There are some issues that are overhanging the markets or overhanging Canada. One of which, again, is this 2011 thing. But as we pointed out, there are only 4 companies in our Canadian Edge portfolios out of 33 different entries that have not told us exactly what their dividends are going to be when they convert to corporations. Not a lot of uncertainty remaining in this 2011 issue. In reality, perception may be a little different. So again, that's when the perception's bad, the reality is good. Eventually, the expectations realign themselves, and you have some pretty nice gains in stocks. So we've got some very nice yields out there, 9, 10, 11, even 12%. That have already been vetted, proven themselves in difficult economic circumstances, are getting stronger on the fundamental side, and are 2011 proof because the companies have already announced their plans for converting to corporations. Very good combination. I'd invite you to check out the issue. I think you'll find a lot to like there. Thanks for tuning in today, and I'll look forward to chatting with you next time.